Recording in progress.
We're going to look at a Fort Walton Beach condo that's priced at $350. Look at some numbers, see how it stacks up with the rents, and look at some of the different lending options. And again, this is just going to be for educational and example purposes. And so, again, Joel Farrell here with Condo Tel Hub, and we're going to share the screen here. So 374 Bluefish Drive is now active. It was off market when I ran these numbers originally. So I'm just going to share some of the data here. So it's a 2-bed, 2-bath condo. The condo fee is $500, access to a pool. And I'm going to get my video part out of here so you can see where this condo is. I'm going to zoom out. So Destin to the east. So it's across the bridge. And we're talking access to the beach within walking distance. And one of the things that we do on this channel is we talk about the biggest question for the lending piece is that someone that's going to be purchasing a property that's going to be a short-term rental. There's a million different examples of why somebody would do it. From a lending standpoint, the biggest question that comes into play is, do you need rental income to qualify? And if you do, that's one set of lanes that we look at for lending options. If you don't need the rental income and can qualify based off of your overall profile, it's a different set of circumstances, which could potentially put you into a better financing package. So I'm going to zoom in just for a second here. You can see on Santa Rosa Boulevard, and it's a quick walk to the beach. So a couple quick pictures. Let's see if we can pull this up. And minimize this. Boom, boom. Nah, all done on the inside. I've got a couple other things that we're going to share. One, I've got air DNA projections, 38,000. I do have a workout from a property manager, 38 seascapes, and this is saying 45,000 of projections pending renovations. Okay, what does that actually mean? Get back to the data. So this is priced at $349, and the way that we've got this set up is the top is do you need don't need rental income, and the bottom do need rental income, meaning that we're probably going to be doing a DSCR loan or a condo tel product, which again, condo tels, meaning it's not approvable through Fannie and Freddie to get your conventional financing, and so we're going to have to use alternative products, different secondary market, which means rates and fees are typically going to be higher than the market. So this don't need rental income. This is a condo tel product that is priced as a second home and not needing the rental income. So the rates are going to be better. Again, these numbers change every single day. All this is just for educational and comparison purposes. I'm using about an 1% difference in rate to compare. So I'm going to kind of go line by line here. So we got a price at $349. This assumption is 25% down. And then interest rate 7.625, 2 discount points. That means 2% of the loan amount as a part of the closing cost. You can see the principal and interest payments, $1,852 versus $1,687. So it's about $170 difference maybe. So this is a 30-year fix, taxes $200 a month. And now we're kind of getting into the nuts and bolts of the back end of it. So taxes, insurance, homeowners association fees. So total housing, $2,652. I did use the 45,000 number here just for simplicity, $3,750. And then what was interesting about that is that they showed 10% rental management fees, which is really low. I mean, 20% is pretty standard. And then they show 25, 35. Okay, but 20 is pretty standard in this market. So I I basically, to make things very simple, I just take these numbers, right? Total housing, including taxes, insurance, and HOA. And then from the rents, you're going to have management fees, utilities, upkeep, linens, replacing things, various expenses that come in. That's a different part of for a different video. I'm just using 70% of that. It's just kind of a rough number. And you can see when you subtract the 70% from the housing, here you got a negative 27. So not bad, right? Depending on your philosophy, you know, and basically breaking even is not terrible. And that's a lot of the investors that I know that are purchasing down here. They're purchasing, for the rental income, for various reasons, to be able to use it on their own along the year, to be able to have some depreciation benefits, long-term appreciation. So if they can break even, cool. So to be in the right financial situation, to be able to not need the rental income, and to be able to have a tax incentive for your LLC, maybe it's cost depreciation, cost segregation, accelerated depreciation type of scenario where someone's trying to, have that as a tool to be able to minimize their taxable income. Various reasons why someone would be purchasing rental properties like this. Obviously, in this scenario, if you put more money down, payment's going to be a little bit lower. And then on this side, you do need the rental income to qualify. So the either Condo or DSCR product rates are going to be higher, and so your net is going to be less. So you're going to be in the negative number here. So it's about $180 difference roughly on the principal and interest between these two rates. So 1% is going to affect your payment by about $180, give or take. So does this make sense to do? Depends on the person. The other question that comes up on this is, okay, well, I've got different lending tools, different products, different amount of money down. Well, what happens if I request a lower price? So let's just take one of these scenarios. Let's say you take this one where we are putting 25% down. We do need the rental income to qualify. And so you can see the negative 210 there. Let's say I come down by $20K. What does that do to the payment? $329. And then tab all the way across. So that got us to a negative 94. Not a big difference. So 349 to 329. Boom. So $120 difference in payment. So some things to think about as you're analyzing condo properties in Florida. And as always, if you have any questions and want to reach out to us, you can catch us on my cell phone, 314-956-1580. You can text me on there, or you can email me, and my information is over here. You can email me, you can text me. Here's the email, and then our BAT line, which is a direct line, is monitored, 8339 BAT line. So until the next one.